All right, guys, earnings time. We got 8 stocks we're watching for next week. And obviously, on our screen, we have a lot of companies reporting earnings. So, market's pretty volatile right now. You guys got to stay careful. And for this week as well, we're going to just be buying up some shares. Nothing crazy. You could also sell some cash puts if you want. But I'm just going to be buying and holding these shares because a lot of these stocks are actually down quite a bit from a very rough January month for 2022. The first stock on our list is going to be none other than Peloton, which actually reports earnings on Tuesday after the market closes. And as you can see, Peloton had actually soared last Friday off of rumors that Amazon will be buying up Peloton. So Peloton's sitting at a pretty good price point, despite being 26% up in the after hours. As we can see past year, it's still down almost 80%, which is pretty insane. And all-time highs was around $162 per share, and we're sitting just at $30 per share. So um, and especially since this stock IPO'd at around $28, it's basically back at IPO price. Peloton, it is a really good pandemic stock, and a lot of the pandemic stocks have actually given up a lot of their gains. So that's what we're seeing with stocks such as Peloton. And then next up, we have Chegg, which is similar as a pandemic stock. A lot of people bought it up back in 2020 when the stock was around like $40 per share. A lot of people moved to online learning. Chegg stock skyrocketed because of it. So we're actually sitting pretty low, lower than the pre-pandemic levels. Um, a lot of people think that once classrooms go back to in person, a lot of people are gonna ditch Chegg. But even in person classes, a lot of people resort to Chegg. It's a very good study tool, and I think that this sell off is an overreaction. So Chegg is reporting earnings um Monday after the market closes. And then next up, we also have Coca-Cola Thursday before the market opens. Coca-Cola, Warren Buffett's favorite stock. I really like the stock as well. I'm holding quite a few shares in my Roth IRA, and it is a dividend paying stock as well, 2.76%. Very, very stable company, very stable stock. The price of the stock does not really move too much, but as we can see, the trend generally goes up. Coca-Cola is just generally is a safe stock, so probably the safest one on this list. So you can't go wrong buying up shares of Coca-Cola. And the next up on our list is going to be Cloudflare, reporting earnings Thursday after the market closes. And as we can see, all-time highs for the stock was over $200 per share. And I actually got into the stock at $40 per share back in like um late early 2021. So I got in pretty early. Stock skyrocketed. I ended up selling out around maybe $180 per share. And then the stock completely tanked. It's given up a lot of its gains. Obviously, going all the way to $200 per share when it IPO'd in late September. That's 1,000% gain. Um, so right now, people are taking profits, it's selling off. But overall, I think that it's definitely going to rebound, and it definitely has. It went to lows of $80 per share. Now we're sitting at $100 per share, and it's at a pretty good price point in my opinion. Cloudflare, really good cybersecurity stock, um, and I'm going to be buying up some more shares, rebuying into it actually in Cloudflare. Next up on our list is going to be Corsair, reporting earnings Tuesday after the market closes. And as we can see, it is another pandemic stock. Gaming saw a huge surge, so the stock absolutely skyrocketed after it went public back in late 2020. And the stock, as well as a lot of the IPO stocks, have given up a lot of its gains. So right now, it's basically sitting at IPO price. Pretty cheap stock. Corsair is it's struggling. So if you want to buy some shares, you possibly can. But this stock does have a lot more downside potential unless we get some surprise earnings, which is what we're really banking on. We're really banking on those surprise earnings. And if we just diversify our capital into some of these stocks, we might be able to catch some of these. So next up on our list is going to be Uber. Wednesday after the market closes, reports their earnings. And Uber is a pretty rough one. It's been up and down. But overall, it's been pretty stable. I went public mid 2019. It's still a really good company. We're gonna have to see what happens with all the robo taxis and stuff. Uber is definitely going to have to adapt to that. But if they can, Uber will definitely stay here for the long term. A lot of people still use their services. Um, and yeah, really good company. Next up on our list is going to be Twitter reporting earnings Thursday after the market closes. And as you can see, it did have a really good price movement last week once as we can see, Facebook reported their earnings, Twitter's stock tanked, then Snapchat reported their earnings, and it Snapchat went crazy and rose 50% in the after hours, which caused a lot of social media stocks to rebound. So all of those losses from Facebook earnings tanking, it's recovered, and it's the rest of the social media stocks doing pretty good. Twitter, Pinterest, yeah, they're doing pretty good. Twitter, it's been pretty rough past year. It is a pandemic stock as well, as a lot of people went to social media during the quarantine. So a lot of social media stocks ended up skyrocketing, as we can see here. And now for 2022, a lot of those stocks have given up its gains. But Twitter, it's definitely a really solid company. It's here to stay. A lot of people still use it, millions and millions of users. Last stock on our list is going to be Disney. It's going to be probably our second safest stock after Coca-Cola. It's going to be Disney. Reporting earnings Wednesday after the market closes. And as we can see, it's been pretty rough the past year. It's definitely sold off, but Disney, I think it's a good chance to get into it. It could be a pandemic recovery stock because once things kind of get normalized, which we really don't know, the parks will see a huge surge in business. But Disney's always a really solid company, has a really loyal fan base, always innovating, and they did end up capitalizing during the pandemic when they released a lot of those subscription plans for the Disney Plus. Um, Even making some movies and TV shows exclusive to their subscription service, which they saw some really good revenue. So Disney always adapting whatever the scenario is. Very very solid company, and the best thing is it is well it used to be I'm pretty sure it used to be a dividend paying stock. Maybe Robinhood is not showing it, but in the future they probably will be paying out dividends again. Although they don't really pay out too much, it was like maybe 0.82% dividends. But overall, Disney is pretty much back to a little it's a little higher than the pre-pandemic highs. So it's really good price point to get into just buying and holding some shares. Disney's a very solid company. And let's see what's in store for them in the future. So that's about it for this video. 8 companies that we're watching for. Probably going to buy a little bit of shares of each of them just for earnings, just to see what happens. You could sell some cash secured puts if you know how to do that strategy. That's always a solid strategy for earnings because the volatility is going to be pretty high. That's about it for this video. Thanks for watching.